Let's talk about taxes in Malaysia. You might think that money is just money, but when it comes to the tax office, that's not really true. In fact, understanding how different types of income are treated is one of the most important things you can know for your personal finances. We're going to break it all down.
All right, let me ask you this. Think about the money you earn. You've got your salary from your 9 to 5, right? But maybe you also have some stocks, some investments that are making you money on the side. The big question is, does the LHDN, the Malaysian Tax Authority, look at both of those piles of money in the exact same way?
And the answer is a clear, definite no. Not at all. The tax system basically splits your money into two big buckets. In one, you have your employment income. That's your salary, your bonus, all the stuff you get for showing up to work. In the other bucket, you have investment income. This is the money your money makes for you. And trust me, how each one is taxed is a whole different story.
Okay, so let's jump into that first bucket, the one that probably affects most of us every single month: employment income. This is the bedrock of most people's finances, so it's really important to know what's what.
You know, the official legal term for this is gains or profits from an employment, and that wording is important because it's deliberately broad. It's not just your salary. It's basically a catch-all for pretty much anything and everything you receive from your employer for the work you do.
So what exactly are we talking about here? Well, you've got the obvious stuff, right? Your monthly pay, your annual bonus. But it also includes things like cash allowances for food or travel. Then there's a fancy word, perquisites, which could be something like a service award. Oh, and don't forget benefits in kind, or BIK, which are the non-cash goodies, like a company car. Even certain pension contributions from your boss can get looped in here.
Now here is the most important thing to get about employment income. It's simple, almost brutally so. The rules say there are basically no expenses you can deduct from it. That means the cost of your commute to work? Nope. The new suit you bought for meetings? Doesn't count. For the most part, the income you see is the income that gets taxed.
Okay, let's switch gears and look at that second bucket of money, investment income. This is a totally different ballgame. This isn't money you earn by working. This is the return you get when you put your assets out there to work for you. It's the money your money makes.
So what does the tax code consider investment income? Well, it's things like dividends you get from shares you own, or the interest that your savings account or bonds pay out. It's the profit you make just by owning assets.
And speaking of investments, there's a number that's about to become very important for some investors, especially as we head into 2025. And that number is 2%.
So what's this 2% all about? Well, starting from the 2025 assessment year, there's a new rule. If you're lucky enough to earn more than 100,000 ringgit in dividends in a year, any amount over that RM 100,000 threshold is going to be hit with a new 2% tax. It's a big change aimed at high-income investors.
And this slide right here shows you the single biggest difference between these two types of income. Remember how we said you can't really deduct anything from your salary? Well, for investment income and business income too, the rules are completely flipped. You can deduct expenses that were, and this is the official phrase, wholly and exclusively incurred in the production of gross income. That is a massive difference, and it offers way more flexibility. So you've got these different streams of income, each with its own set of rules. How does LHDN actually mash it all together to figure out your final tax bill? Let's follow the money and see how it works.
The best way to think about it is like a bunch of rivers all flowing into the same lake. You got the river of your salary, maybe a smaller stream from some rental income, another one from your investments. They all flow together and merge into one single pool. And it's that final pool of money that the tax office looks at. Okay, it's basically a three-step journey. First, for each one of those rivers, you figure out your statutory income. That's the income after you've taken any deductions specific to that source. Step 2, you pour all those statutory incomes together to get your aggregate income. And finally, step 3, from that big pool, you subtract all your personal reliefs. You know, for yourself, your family, lifestyle purchases, things like that. What's left is your chargeable income, and that's the number your tax rate gets applied to.
Now, for our last section, I want to talk about something really special and incredibly powerful in the Malaysian tax system that applies to Muslim taxpayers, and that is the zakat rebate.
To really get why this is so powerful, you have to understand the huge difference between a tax relief and a tax rebate. A relief is good, don't get me wrong. It reduces your chargeable income, so you pay tax on a smaller amount. But a rebate, a rebate is like gold. It's a direct ringgit-for-ringgit reduction of the final tax you owe. It's literally like the government giving you cash back against your tax bill.
And that is exactly what zakat is in the eyes of the tax system. It is a direct tax rebate. This means that every single ringgit of zakat you pay to an official zakat authority can be used to directly subtract from your final tax bill. It's a one-to-one offset.
And the effect of this can be massive. Let's say your final tax bill comes out to 3,000 ringgit. But during the year, you paid 3,000 ringgit in zakat. Well, guess what? Your tax liability becomes zero. It wipes it out completely, up to the total tax you owe. It is easily one of the most impactful parts of tax planning for Muslims in Malaysia.
So after all this, after seeing this tale of two incomes and the power of things like the zakat rebate, here's the question I want to leave you with. Now that you know how it all works, are you really making the most of it? Are you taking advantage of every single relief and every single rebate that you are legally entitled to? It's your money, after all.